Good evening. It's Monday, June 22nd. I'm Sharon Nabobi, and this is Closing Price from FNDATA. We provide a daily market read. We provide a daily market read on luxury and collectibles. Today gave us a clean contradiction, and this was the signal. The broad markets rallied, with U.S. stocks jumping after weekend progress in the U.S. and Iran peace talks. Today gave us a clean contradiction, and this was the signal. The broad markets rallied, with U.S. stocks jumping after progress from the weekend in the U.S. and Iran peace talks. This eased fears of a wider war, but investors sold the luxury houses anyway. The European luxury basket fell hard, led lower by Hermès and LVMH on a day when almost every other risk asset rose. Those stocks did not fall because people stopped buying luxury. They fell on the macro backdrop with a dollar at a 1-year high and rising bond yields. These are both forces that bear directly on richly valued exporters, such as the luxury houses, regardless of how well the underlying businesses are performing. For how the luxury goods are actually selling, let's look at the auction market, where demand at the top is still at its high. So in other words, the luxury companies' the luxury companies' share prices fell, but the prices their customers actually pay did not. On the listed side, the move was striking. In Europe, Hermès closed down about 5.9%, LVMH off 3.6%, Burberry off 3.9%, and Kering off 2.2%, with Italian cashmere maker Brunello Cucinelli the weakest, down nearly 7%. The watch names held up far better with Swatch off about 1% and Watches of Switzerland down only 0.5%. This was caused by the day's macro news. The weekend's diplomatic progress sent investors back into risk assets, but it carried an inflationary sting. According to Bloomberg, fresh threats from President Trump against Iran stoked inflation fears, lifting bond yields with the U.S. 10-year back around 4.5% and driving the dollar to a 1-year high. Higher rates and the stronger dollar are precisely the forces that weigh on an expensive, slow-growth exporter, and the European luxury houses are the textbook case. Britain added a further complication with the pound near a 2026 low, as Prime Minister Starmer was reported to be weighing his future, though for global luxury this remained a sideshow to the rates and dollar move. The clearest sign that this was a macro story rather than a demand story was the contrast with the American names. The more accessible U.S. listed brands actually rose, with Tapestry up 2.3% and Movado up 5.4%, even as the European mega caps fell. Now flipping the screen from the trading floor to the auction sale room, the market underneath those brands is where our data has its real edge. Here, the signal runs the other way. The single biggest auction result in our database over the past 90 days. The single biggest auction result in our database over the past 90 days across every category we track is a $17.4 million color diamond sold at Christie's. And the most recent watch cycle set fresh records, including a Phillips New York sale that was the highest grossing watch auction in U.S. history. The most recent watch cycle in the past few days set fresh records, including a Phillips New York sale that was the highest grossing watch auction in U.S. history. This was at $75.8 million. This is not the profile of a demand problem. Whether that strength is holding more broadly This is not the profile of a demand problem. Whether this strength is holding more broadly is exactly where our secondary whether this market strength is holding more broadly is exactly where our secondary markets index measures, mapping resale prices across the major houses onto the listed names. So the setup is a clean divergence between price and demand. The equities marked down today on $1 and rates. So the setup is a clean divergence between price and demand. The equities marked down today on the dollar and rates, and resale data is holding at its highs. And resale prices with auctions are holding at its and resale prices at auctions are holding at all-time highs. Today's sell-off in the listed names was about the discount rates and the currency, not the business and the auction data. Today's sell-off in the listed names was about the discount rates and the currency, not the business, and the auction data says end demand has not cracked. This leaves one question that our data is built to answer. Does resale demand lead the listed cycle or does it lag it? Resale prices in the auctions are what end buyers actually pay. So when they reveal the pricing, so they can reveal the brand's pricing power. So they can reveal the brand's pricing power before it reaches the income statement. If resale and auctions lead, a day like today is an opportunity. If it lags, it's a warning. Either way, the signal lives in the gap. If you want to test this divergence yourself, the data is in our sandbox. The luxury equity basket against our secondary market series, plus the lot level auction data behind it are available. Register for free for the FNDATA data sandbox and pull the series directly. To get this, visit our website at altfndata.com or email us at info@altfndata.com. That's it on closing price for today, Monday, June 22nd.